necessarily represent the views or opinions of the staff, management, or ownership of this station. It's time to get on the right path with Right Path Real Estate Radio with Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today.
I'm going to need to turn me up a little bit. There we go.
Get ready. The guy that will put your fears behind you is on the air now. Taking calls
Phone's
at
controlled.
713-785-1817. Toll free
There we go.
877-881-0271. Now here's your host,
You ready?
Yep.
Jason Bible.
All right, hot mics.
Welcome to the show. Welcome to the show. I hope you guys are watching that jobs report this morning. Market data is coming in fast and furious. This is a real estate show, so you probably wonder, Jason, why are you concerned what's going on with the capital markets? Because job creation equals house buying. It's that simple. It is that simple. I can distill how this entire thing works by basic supply and demand. More jobs equals more houses getting bought. More construction equals more properties available in the market. It's that simple. It is literally that simple. Have you ever noticed that people who are true practitioners in something, they can distill something down that's so complex into a handful of elements? You'll hear some people who are, how can I say, less sophisticated call this, quote, dumbing down. I've always hated that term because nothing could be further from the truth. Making something really simple to understand that's inordinately complex takes an incredible amount of intellectual capacity to do. And most people can't do it. It's really hard to make something incredibly complex very, very understandable for the layman. In fact, that was my former job, what I used to do for senior management. It's not like these people were stupid. You don't have to dumb anything down for them. They're not dumb. All you need to do is give them the right data so they can make an informed decision. So here's what I'll tell you about today. Articles are just coming out this morning. I'm going to read you the headline. A record 1 million full and part-time jobs added for the month of February. 1 million full and part-time jobs added in February. To give you an idea, that's a record for this century. 1 million jobs. 1 million. The reason I'm going to beat this to death is because I know the national media, because they hate this president so much, they're not willing to talk about the good things that are happening. This is insane in a good way. It's absolute bananas. We've gone full parabolic here, folks. You got to remember, you go back and look at the recovery. You look at the economic recovery in the United States. They shouldn't even call it the economic recovery in the United States. It was Texas and a handful of other states. It was Texas, and if Texas weren't here, I'd have to look at the data. If Texas weren't here, I think we'd still be in a recession. Now the rest of the country is starting to catch up, which we knew inevitably would happen at some point. 1,006,000 full and part-time jobs, the biggest monthly gain this century. Insane. Absolutely insane. Now there's all kinds of... This is what you're going to hear on the nightly news. This is what it's going to sound like. I've been here, now that I've crossed the 40-year-old mark, I feel like I've got some sage wisdom in me. And I can already see where this is going because I've seen this happen before. There's going to be this, let's say like the nightly news. Doesn't matter what program you listen to, big national news. And the program will start and it'll say, a whole lot of jobs are added in the month of February. But it'll come on with this ominous tone, like something really bad. Like Americans being employed is a bad thing. Like, bum, bum, brr, and there'll be like the dark lights and the dark music and all that. And then they'll go, and it'll start with, whole lot of Americans were employed in February. And then they'll say, but inflation is coming. Like it now, if we were in a different president, it'd be like, woo, yeah, 1 million jobs. But now it's like, well, I don't know, inflation is on the way, which of course is absolutely true. But it's all about how you read into these things, right? Watch the news tonight. That'll tell you who's got some real bias there. So now we're starting to see some inflation triggers. I've said this for, 8 years now. Even before I got into real estate, the only thing that's keeping inflation at bay is employment, which is kind of weird because what's good for Main Street is not always good for Wall Street. Here's a little weird thing for you. If you're invested in the stock market with your 401k, your IRA, you work in Main Street, but your retirement is in Wall Street. That's weird, isn't it? And I can tell you, growing jobs, growing employment, increasing in the cost of labor, which necessarily increases inflation, is not necessarily great for Wall Street. It's great for us on Main Street. That's one of the reasons why I'm in real estate. I really don't care about inflation personally because my assets are inflation adjusted. Look at how many times the CPI, Consumer Price Index, has been revised over the years. Like 15, 20 times. Well, they'll include this many points for energy and then this much for housing and then not. And it's all kind of a big game. The government's playing with its own numbers. But here's the reality. My portfolio is hedged against inflation. So I'd love to see Americans employed. I'd love to see Americans making minimum wage to be $1 million a year because to me it doesn't matter. I just don't care. Conversely, if the whole world fell apart, Armageddon happened. Oh, by the way, one of the things Tom was fond of saying whenever we do any of our weekend events, hey, we think this is going to happen, but heck, North Korea could start shooting missiles off tomorrow. If you saw the news overnight, looks like this will be the first time. Now, it's not official yet, but it looks like it's going to happen. This will be the first time a sitting American president has met with a leader in North Korea. And they're talking about denuclearization. Now, isn't it kind of weird? Trump announces tariffs yesterday. I happened to be in the truck. I was listening to the press conference. That's going to hit China like, a lead brick. And then all of a sudden the North Koreans come to the table for denuclearization. That's weird, isn't it? Isn't that weird for all that to happen in the span of about 96 hours? Huh. It's almost like we got an adult in the White House. It's kind of weird. Anyway, let's go back to real estate. Jobs are great. Inflation, deflation. As a real estate investor, I don't care. If the whole market falls apart and our new currency is Bitcoin or sacks of potatoes or heads of chicken for rent, or that's the new currency, I don't care. Because at the end of the day, I'm in the housing business. And last time I checked, nobody likes living in a cardboard box or under a bridge. So they're either going to buy or rent my house. It's that simple. So for me, if the market is changing and there's more jobs and people are getting paid more and there's inflation, I don't care. It doesn't matter to me. It doesn't matter to real estate investors. But I can tell you this. When we're flipping houses, the more jobs created equals more houses bought. A little metric you'll hear in the real estate community is for every 2 jobs created, 1 house is bought. Now, loose interpretation, 1 million jobs created in February, that means 500,000 houses should get bought
2 minutes.
in a month. That's pretty sweet. We sell on and off MLS here in Houston about 10,000 houses a month. So that's the equivalent of 50 Houstons selling houses in the month of February. Hint, folks, this is why I keep telling you the price of houses under 200 grand are going to continue to rise rapidly. You're going to turn around 7 years from now, look around and go, oh my gosh, I remember when those little houses in that neighborhood were 125 grand and now they're over $200,000. I remember when I could buy those and rent them. This is going to be one of the best times in our lifetime to buy real estate because the recovery is here. If you know what you're doing, you can buy 2 houses, rent both of them out, and over the next 7 years, if you do nothing else, you can sell one and pay off the other. You want $10,000 a month in income? Buy 20 houses in the next 2 years, 5 to 7 years from now, sell 10, pay the other 10 off, and you have $10,000 a month in cash flow, debt free. This is one of the strategies we teach at our weekend retreat. It's one of the strategies we teach to our students. We get back from the break, I'm going to talk more about what's going on in the market as I'm getting data that's coming in during the radio show. It's Jason Bible, Right Path Real Estate.
Thanks, off.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that.
Hey, Jay, when you have a second, check your email.
Or binders.
Okie dokie.
For that is Benchmark Insurance Group of Texas.
Hey, John.
The team at Benchmark understands the investor mindset.
I was in my Gmail account.
We're here for you. Are you a rehab?
My Right Path email?
Buy and hold or flip?
Oh, yes, Right Path. Sorry.
Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do.
Oh my gosh, I love that graphic.
Andy told me to use that. I like it.
That is awesome.
Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Are you looking for an investor
All
friendly
right.
general contractor?
Yeah,
for
take a
your
look.
investment property? Then call Fast Track
Okay.
Remodeling
I
at
sent it back to you.
832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track
Ooh.
Remodeling specializes in turnkey
hey, Nikki?
remodeling of single-family investment properties.
What are you
Whether it's a
doing
flip rehab or a rental
Tuesday
rehab,
night?
We manage every aspect of a
Tuesday?
rehab from start to finish with a highly
have no
efficient,
idea.
standardized
I don't
process.
think anything.
Over the
March
last 6
13th.
years, Fast Track has completed over 700
Tuesday?
projects, which has helped us to create our
Yes,
3 keys to
yes.
success.
That's
Do
the
detailed
White
scope
Picket
of work
event.
so that everything gets done.
Okay,
Train
let
and
me-
maintain
I don't think
quality
I'm doing
crews
anything.
so it
What
gets
time
done
is it?
right. and complete the work in a
Uh,
proper order so it gets done
5:30,
fast.
6:30. It's
No
at
more
St.
managing it
Arnold's.
yourself, no more doing the work
Oh, I
yourself.
think I have the email.
Fast Track
I'll look real
Remodeling
quick.
really
Okay.
does manage it
All right,
all.
10 seconds.
So give us
All
a
right.
call today.
Yeah, if you can't make it, no big deal. But it's one of those you ought to go to. It's a
9992.
it's a fun one.
Again, that's 832-742-9992 or reach us on the web at fasttrackremodeling.com.
This is Business 1110.
All right, here we go. Hot mics.
Let's let this run for a minute. This is great.
You're hot, FYI.
I know. All right. Get ready, folks. The show is about to start, and what do I mean? This is the beginning of the end for single family real estate in this cycle. That's what's happening. People are getting jobs, interest rates are rising. Now, how long that time period is, I have no clue. Could be 3 years, could be 5, could be 7. Could be 15. Got me. But we're at that point in the business cycle now where single family is in that last kick where you start to see price appreciation that is going to blow your mind. If you look at 15% per year appreciation, that means an asset will nearly double in value in 5 years. I want to say that again. So we're all on the same page here. 15% appreciation means that house doubles in about 5 years. The number I keep giving you guys is every month you're not buying a house. You're losing $1,000 a month. Every month. So in January, when you need to buy a house, it costs you $1,000. In February, when you need to buy a house, in January, it costs you $1,000. But then when you need to buy a rental property in February, it costs you $1,000. In March, it's March 9th. If you don't buy a house this month, it's going to cost you $1,000 for March. It's also going to cost you $1,000 for the house you didn't buy in February. And it's going to cost you $2,000 for the house you didn't buy in January. If you bought it in January, you would have made $3,000. If you bought a house in February, you would have made $2,000. And if you bought a house in March, it'll make you $1,000. Meaning, if you have not bought 3 houses this quarter, 1 per month, it's going to cost you $6,000. That's just in cash flow. Profit from rents. That's really what cash flow is. Profit from rents and depreciation. By the way, that's only half of how you calculate the internal rate of return for a piece of real estate. If you're only measuring cash flow, you're only measuring 25% of the metrics that you use to determine return on a piece of single-family real estate. When I get people who email me and say, Jason, I need to have at least a 15 or 20 or 30% rate of return, and based off this cash flow, I'm only getting X. And I'm like, yeah, because you don't know how to calculate return. That's part of the problem. If you didn't buy a house in January, February, and March, you have lost $6,000 in opportunity cost. $6,000. And that doesn't even include debt pay down. $6,000. Unbelievable. How many of y'all are willing to continue to not take action? Oh, but Jason, you don't understand. I'm $10,000 out of pocket instead of $7,500, which is my goal. And while you're sitting there waiting to meet some arbitrary goal that doesn't mean jack squat in the real world, you're losing money. This market is about to turn into an inferno in certain sections. It still remains to be seen. Now, I'm talking nationwide. Still remains to be seen what happens with Harvey. That's kind of a whole different deal. Although if this trend continues, we may zip right through all the downturn in Harvey and may not even experience it. Heck, you want to talk about the black swan event, the rare event. We may have all this inventory that comes on market as it relates to Harvey, and demand just may suck it all right out. And the supply, the increase in supply, that demand may just step in, buy everything, boom, the whole Harvey crash is over before it even started. That is very likely. Depending on how many houses hit the market, this Harvey investment boom could be over in about 6 seconds. I mean, it would blow your mind how fast it would begin and end. So go ahead and wait. Here's what I'll tell you. Every single one of y'all in your neighborhood right now, your neighborhood may not be a good neighborhood to invest in. But I can just about guarantee within 5 miles, there's a good neighborhood that's good for rental properties for you. And 5-6 years from now, you and your spouse are going to be driving around some little neighborhood with 12, 13, 15, 2,000 square foot houses, and you're going to go, wow, honey, don't you remember when these houses were $150,000 houses? Now they're selling for $225,000. That's insane. And if you had paid full retail for that thing 4 or 5 years ago, that's $75,000 in appreciation would be in your pocket. I'm telling you guys, it's coming. The train is coming. It's already left the station. It's coming, and it's coming fast. There is a massive upswing coming in single-family real estate. At least all of the indicators are there. People are getting jobs. If you went back to the January jobs report, one of the things that caused that little flash crash we had, in part, was the 2.8% month-over-month increase in wages. People are getting paid more. And what do? They go out and buy houses. Here's the crazy thing that's about to happen. We've got people who are starting to get paid more. We've got people who have not been able to buy a single-family house to live in, an owner-occupied house. For a couple of reasons, it's been really tough to get a home loan for houses under $200,000, especially when you start to get around $125,000, $140,000, $150,000. That's a tough borrower to qualify. As interest rates rise, we will begin to see those lending standards relax a little bit. Now that same buyer is making a little bit more money. Banks are willing to take on a little bit more risk, and all of a sudden you've dumped tens of thousands and nationwide, if not millions of people into the real estate market to buy houses. In fact, there was a little story about 6 months ago that basically said some underwriters and some credit agencies are changing the way in which they view certain negative aspects on house buyers' credit reports. And these changes over the next 6 months are going to result something like, on average, a 40 to 80 point increase in credit scores. So the credit bureaus are making some changes, lenders are making some changes, and buyers are making a little bit more money. You don't have to tweak a whole lot of those before there's tens of thousands, hundreds of thousands, and millions of more people who are now qualified to buy a home for the first time. And where are those first-time home buyers buying? Typically at or below the median home price in a housing market, which in most cases is where buy and hold landlords operate. We typically operate below that median home price. Now, flippers, we operate well above the median home price. But for those of us in the buy and hold space, we're below that median home price. 130, 100. Actually, we sent a property out for wholesale, and if we don't wholesale it, I'm buying it. The ARV on this thing is $85,000, and it rents for $1,000 or $1,100 or $1,200 a month. I can't remember the exact number. It's over $1,000 a month, and it's a great little area town. That will be a $150,000 townhome in the next 5 to 7 years, and it'll cash flow like a monster. This is where the market is headed, guys. It's absolutely where the market's headed. Houston, those of y'all listening in Houston, Harvey's the only thing we hadn't figured out yet. How receptive are buyers to flooded homes? I was talking to a couple buddies of mine. Actually, we've got an event next week. We're going to talk about this. March 15th, it's open to the public. We're going to talk about how to rehab a mold house. One of our students did a big mold rehab. They're making a really great money on this particular property. We don't want to publicize it yet because it closes next week. But we're going to talk about that whole buying process and the whole selling process and how to rehab it. Go to rightpathrealestate.com. You can sign up there. It's March 15th, Thursday night. So in Houston, Harvey's a little different deal. We get back from the break. We'll talk more about what's going on in the market. It's Jason Bible, Right Path Real Estate.
Mike's off.
Hi, Clint Coons here, attorney and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen.
Oh, it's a cute little house.
Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent,
where is that?
unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your
It's way out-
foundation.
way
Our
out there.
product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before every repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Did you know that there are
1
over
minute.
$24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA
The
to
voice
fund all
of
of your
Quest
deals.
IRA.
Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
This is Business 1110.
All right, hot mics.
Welcome back. Fibbed a little bit. I was looking at financial news, and I'm building a custom road bike with a guy here in Houston, which is something I've always wanted to do. We're going back and forth on email right now. So anyways, I'm doing that. 1 million jobs. So what's happening in this market? For every job created, a half a house is bought. For every 2 jobs created, 1 house is bought. So let's take a look at the sectors. I'm reading this through Zero Hedge, where the jobs were in February, who's hiring and who isn't. Construction is up a whopping 61,000 jobs. Durable goods, 32,000. Retail is up 50,000. This is very interesting. There's a common theme out there right now that Amazon is replacing every retailer in the world. That is not true. If you also look at the total online purchases, online sales versus retail, it's a very telling number. It's still a fraction of the market. So don't think that Amazon Prime has completely replaced all retail. That's not true. That's not true. So retail is up 50,000. Professional services are up 50,000. Here's what's interesting. Government's up 26,000. Schools at 27,000. Amazing. For every 2 jobs created, 1 house is bought. Manufacturing is up 30,000. Healthcare is up 9,000. Mining is up 9,000. In fact, with the some of this mining operation is anticipation of what happened yesterday with the tariffs. However, what I can tell you is that it's once these things pass and it's going, I mean, it's going to be game on. Be a lot of people that are opening their doors back up. What else? Construction much higher than expected. Home builders are hiring, and the bottlenecks I saw did not show up in the BLS data. Manufacturing higher than expected. What is also quite notable was a sharp plus 50,000 jump in retail jobs, which have wiped out the doldrums from the recent brick and mortar collapse and are back to record highs. It is, guys, it is on. It is on. Now, one thing I cannot figure out, and I've talked to my buddies in oil and gas, something is going on with oil. It's almost, how can I say this? With a huge caveat, allegedly, boy, the oil market feels manipulated. I don't know what's going on in oil. But that barrel of oil ought to be way higher than where it's at. Something's not right in oil. Now, I'll tell you, we had the same feeling a couple of years ago with silver and LIBOR. And, of course, we found out later there were a bunch of banks that were colluding. Some people, I have to go back and look at the court cases to see if they actually got indicted and went to jail. But there, absolutely, LIBOR market was... There were some challenges in the LIBOR market and challenges in silver, too. There were some manipulation going on. I feel like that in oil. It got no proof. It just feels like it doesn't feel right. I've talked to some of my oil and gas buddies that are on the upstream. They're on the production side, upstream and downstream. Talked to some of my buddies of mine. They're on the finance side that do trading. Something's not right in oil. So here's what I'll tell you. The good times are back. Like 2005, 2004 back. The only thing I don't know is how Harvey is going to be impacted by all this. All those houses that are going to end up on the market as distressed sales or as fully fixed up retail sales, we don't know how Hurricane Harvey is going to impact the market. It's still a little too soon to figure that out. Last time I looked, it was only 1,000 or 2,000 homes that were sold on MLS that were flooded from Harvey. It's out of our estimate is, my estimate was 255,000. I watched a news report recently that said it was 300,000 houses that were flooded from Harvey. I think there's a lot of people holding out hope that FEMA is going to come in on a white horse and save everybody. That's not going to be the case. So they think the city's going to come in and buy their house out because it flooded. The city has never bought any houses for that. It's the county that does it, and they all do it through FEMA. So I'm not I think there's a lot of people holding out false hope, and they're going to, in the next 6 months or so, they're going to realize that either I got to fix this house or I got to move out. We're also starting to see this. I alluded to it earlier this week on Wednesday's show with Tom. We're seeing a lot of, how can I put this, less than ethical contractors that are going into these homeowners, and the homeowner says, wow, I got a $250,000 check from FEMA. And they'll say, hey, that just happens to be how much it's going to cost for me to fix your house. So let me go ahead and get 50% up front now, and we'll go ahead and get the job started. And they get a $125,000 check from that homeowner. They do about $20,000 to $30,000 in work, and then they disappear. They're literally running this little Ponzi scheme. That's the rumor I'm hearing out in the retail market. Those poor people are going to homeowners are going to get taken advantage of. It happens every time during these storms. And then they're going to look around and go, I don't even want to try that again. I don't know how to vet a contract. I don't know how to do any of that stuff. Jason, will you just come please buy my house? I don't want to deal with it. And I'll go, absolutely. We'll come out there, make you an offer on a house. We'll buy that house. We'll buy the house at fair market value. I mean, that's what we pay for these things. People think you got to, there's this seedy underbelly to real estate that says that you got to, rip people off. That's ridiculous. We sit down with folks and we go through the numbers with them. We say, this is how much we're going to make on it, and this is how much it's going to cost to fix it, and this is how much you're going to make if you do it. This is how much we're going to make, and I mean, it's up to you. You want to do it yourself. This is how much money you'll make. This is how much we'll make if we do it. There's your choice. I love that. We really sell education we sell obviously education here on the Real Estate Education Radio Show, but we sell education to the people we buy houses from. This is what we think it's worth. This is what it's going to sell for. What do you want to do, man? It's up to you. I love that part of our business. That's just how we chose to operate our business. We let people know how much our house is worth. I think that's the ethical way to do it. I don't have to rip people off. I see people get ripped off all the time. It's like, why do you have to rip people off? It doesn't make any sense. So that's going to happen. Now, that impact on the market, I have no clue what that's going to do. If demand is high enough, that extra supply from Harvey will just allow a small sink, if you will, to absorb some of that demand. So you may not see price increases, but we may be singing a whole different tune 12 to 18 months from now. I mean, if you go back to the RTC days in commercial real estate, when there were adults that were running this country that said, oh my gosh, commercial real estate's in the dumps, And they basically told all current commercial real estate owners, they said, look, guys, it's going to be a bloodbath for 18 months. We're going to dump everything. We're going to get all this bad real estate off the books from the savings and loan nonsense. So close your curtains. Just pretend like nothing's going on outside your commercial projects for the next 18 months. But we're going to liquidate everything. It's for pennies on the dollar. In fact, the story I had heard, the building we're actually in was bought during that time. However, we're going to get through all of this garbage inventory right now and get it into investors' hands as fast as possible so we could start the recovery in 18 months. Instead of 8 years like what we're doing now. Oh my gosh. It's like 2007, 2008. If we just ripped the Band-Aid off, we would have recovered in like 18 to 24 months instead of this low interest rate, keep all these broke banks propped up nonsense. Just let these guys fail so they can turn back around and get the machine running again. It doesn't make any sense to me. But we're headed there, guys. Things are looking good. Only thing I don't know are those neighborhoods that have Harvey impacted houses in them. We could be in a situation where houses outside of flooded markets are on this rapid incline, and the stuff and the houses inside these submarkets that have a lot of impacted houses have a mini recession. That's totally possible. It's absolutely possible. And as real estate investors, it's a really unique environment in that you can have a neighborhood that experiences a recession, yet your financing is available as if it were a boom time. For example, there is so much really great financing out there. In fact, the world of single-family real estate is changing. Financing is changing rapidly for investors. I'll tell you what, our weekend retreat, we have our banker in town. He's flying in town. He's out of LA. He's flying in town next week to go to our weekend retreat. I'll tell you guys this. It's worth it to go to the weekend retreat. The price is worth it just to see his hour-long talk. Because he sees things at a very big level at a huge international bank. He can see what's going on in this market a lot better than we can from literally, I don't want to call it a 30,000-foot view. It's like from space. That's how high his view is. It's totally worth it just to hear his presentation alone. In fact, if you send an email to support@RightPath Real Estate and you want to go to the weekend retreat, we'll send you a special discount code today only. We'll take $1,000 off the weekend retreat. We'll do it for $197. But I'll tell you this, just listening to his presentation alone is worth it for the entire event. You know, Tom and I both do the weekend retreat, every month. And the only presentation I sit in is his because I've seen our presentations. So I sit into his to get the update. But here's what I'll tell you guys. It's going to be a very interesting ride, especially here in Houston, with the things that are going on with Harvey, with all the job growth and the improvements in the economy, and what that's going to mean as both of those things collide. For those of you in the rest of the country, y'all need to just buy real estate. Buy. The economy is improving rapidly, and we've got really great lending out there, really competitive products. We get back from the break, talk more about real estate investing. It's Jason Bible, Right Path Real Estate.
Mic's off.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at andersonadvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
You found or inherited a great investment property. Problem
One
is
minute.
you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just
Okie
looking
dokie,
for a
let's
number
see
of what
here.
the property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
Hot mics.
Welcome back. Jason Bible, Right Path Real Estate. Now's the time to invest, folks. Now's the time to start buying houses. At least that's what we do. Buying single-family real estate. Buy them and rent them. If you got the right financing in place, you got the right operations in place, you've got the right team, you can buy real estate. We're big fans of it. We're big fans when it's appreciating. We're big fans when it's depreciating. We're pretty much real estate fans about 24/7. Here's what we do know on the long term, real estate continues to appreciate. Now, when you exit is important. Similar to any other asset class, you want to make sure you exit at a time that makes sense. We're making money. But the reality is what we're seeing here is there's inflation a-coming. And a great inflation hedge is single-family real estate. Got a question last night during our free event. I said, hey, Jason, what's the risk if 5 to 7 years from now there's a housing crisis or housing collapse? Or I said, well, you're renting the property out, right? They said, yeah. I said, as long as there's not a rental crisis, it's do pretty good. Just hold on to it. Whenever you see these real estate cycles, the people that get wiped out first are builders. Builders and developers get hammered. They usually go bankrupt and they're out the door. Flippers end up bankrupt or just losing a lot of money. Condo developers always seem to be the worst. They get hammered, absolutely hammered in downturn to market. Little hint, the canary in the coal mine for single-family real estate is condos and townhomes. Those are the last things to appreciate and the first things to fall, always, because they're not quite a single-family house. They're kind of a hybrid. So those are our barometers, if you will, for how the single-family market reacts or will react to changes in the economy. Here's what I do know. They're not making a whole lot of more single-family houses below $200,000. They're just not. Just not a lot of money in development and building those houses. The more of those you own in your portfolio, the longer you own them, the more they're going to end up being worth. That's just the reality of this business. Those little houses are going to continue to appreciate, provided they're in good neighborhoods with good schools. Those houses will continue to appreciate. It will blow your mind in 5 to 7 years what those houses will be worth. In fact, if you've looked since 2012, Houston's averaged about a 7% appreciation, Dallas 12% per year since 2012. That's an astounding number. All the while, you're buying these rentals and they're just cash flowing. Just kicking off a little cash here and there. If you want to learn how to do this, you need to be at our Right Path Real Estate Income and Wealth Workshop on Friday, Saturday, Sunday. Go to rightpathrealestate.com. You can sign up there. If you want a discount code for it for today only, send an email to support@Right Path Real Estate. That's support@Right Path Real Estate. And we'll get you signed up for the weekend retreat. Come out to our next free event. It'll be Thursday night. We're going to talk about how to flip and sell moldy houses. So it'll be a lot of fun. You guys will get to see a moldy house case study. That's March 15th. Go to rightpathrealestate.com to sign up there. Or you can go to Meetup. We got the event on Meetup as well. Thanks for listening, guys. I'll be here bright-eyed, bushy-tailed Monday morning, 9 a.m. We'll see you then. It's Jason Bible, Right Path Real Estate.
All right, Mr. Bible, have a good one.
Excellent. Thank you, ma'am.
Bye.
Bye.